Hello, my name is Thomas Abraham James. I'm the CEO, president, and co-founder of Pulsar Helium. As the name suggests, we're a dedicated helium exploration development company. We are listed in the UK on the AIM exchange, in Toronto, Canada on the TSXV, and quoted in the USA on the OTC. Our primary project, our flagship project, is the Topaz project in Minnesota, USA. And we also have the Tunu project in Greenland.
Tom, good to see you again. Appreciate this. One, because it's really early where you are, and two, it's really cold where you are. You're up in Minnesota. How are things up there?
Yeah, I'm just down the road from site from our Topaz project. So greetings from literally a cabin in the woods. So I wish I could show you what it looks like here, but just out there we have a completely frozen over lake. It's minus 21 degrees outside, and dog sleds whizzing by and so on. It's a winter wonderland.
Good, right? Okay. Well, you're not normally based there, so what's happening on the grounds, and how long are you there for?
Yeah, so I really think it's important for a company with particularly when we have really key field activities going on for the CEO, for myself to be here. And in fact, I wouldn't miss it for the world, to be honest. It's quite exciting. So we have the deepening of the jet stream #1 well. So a bit of background was last year we drilled our first well into the Topaz project, and we encountered very high helium concentrations there, up to 14.5%, naturally flowing up to surface, no water associated with it. It really is a discovery that we're very proud of here as a company. Since drilling that in February, we then gathered more data, and that was both from down the hole and then also surrounding geophysics, and everything pointed to that this reservoir extends deeper than what we actually drilled. So we went down to 2,200 feet last year, and so what we have just completed, we just announced yesterday, is that we put a rig back onto that well, and then we went and we lengthened it. And we had a mind's eye with the data. There's going to be about another 1,600 feet worth of potential helium-bearing reservoir. In fact, it seems to be thicker than that, and we drilled down to a maximum depth, the total depth of 5,100 feet. And whilst drilling, we can see that there's gas being encountered down the hole with our sensors and equipment at surface, which monitors that. So that gives us that level of comfort to continue. And yeah, it was, by all accounts, it appears to have been a success.
Okay. Well, I saw the press release saying that you were looking at deepening the drilling from last year, and you've gone down 5,100 feet. Great. But what? How does it work? How does it work when you're sort of chasing helium? Is it quite like chasing gas? And in terms of the data that you get back, what are you analyzing, and how long does it take?
It is very akin to natural gas. So for us, the drilling was fairly quick. So we use an air style of drilling, so a hammer bit, and that goes down quite rapidly. The geology that we're drilling through, won't bore you too much with that, but it's not a conventional sedimentary basin. But what we have is a fractured basin. It's a crystalline hard rock, so a very competent rock. Which has its advantages. You don't have to worry about running sands or holes caving in and so on. So with that one, it allows us to drill at a bit better speed than normal, perhaps. With it, we then, as we're drilling down, and then if we do encounter a helium-bearing reservoir, then that the air that we're drilling with, it comes back up to surface, goes through the equipment, and what we then get is we get diluted samples. So whatever gas we do encounter down the hole is then mixed with the air that we breathe and then analyzed. So it understates what we have. Which is quite important because we were seeing levels up to 7% helium. When you consider that's heavily diluted, it's yeah, that's an incredible result that I think a lot of other companies would be quite jealous about, to be honest. 7% as being one of our diluted samples. So, but the technology afterwards, so we completed drilling. We then put down a series of downhole tools to basically gather reservoir characteristics. And then at a later point, so in the quite near future, we're then doing what's called an optical televiewer, which is basically fancy words for a video camera on a stick, which then maps out all of the reservoir, all the fractures. And then after that, it's the pressure and flow testing as well. So everything is more or less akin to the natural gas industry.
Right. And how do you manage? Again, I know about oil and gas and chasing reservoirs there. Is it exactly the same? Are there any sort of differentiations in terms of how you manage the reservoir and the field and how you go about doing that? You talked about, the second rig, moving out as we speak, but how does that operate?
So for us, it's a truck mounted rig. It is a conventional gas rig. So prior to being on our job, this rig was actually working in North Dakota with hydrocarbons up there. The personnel that we have mud loggers on site. We have all the other equipment that you would anticipate. We have the blowout preventer on the rig in case anything, over pressured gas is encountered. But the reservoir characteristics itself. What we have is a bit of a geological freak, I would say. So there are no real precedents for this one. So the things that we're really keen to gather data on is the porosity and permeability of the rock. Those are the big ones for us. So with the sandstone, there's the methods of trying and tested. How do you get those numbers? Whereas what we're doing, it's going through a slightly different reservoir. Not completely unique, I guess. There are a couple of other ones out there. But this is why we are now just about to go and start drilling our second well, which is relatively close to the first one. And that will tell us a lot about how the two wells talk to each other and go some way to answering some more, or give some more detail about that porosity and permeability, which is the big one for us.
Right. Okay. So, to come back to the bit about how you kind of manage the field and how you go out planning and targeting drill locations for this in terms of whether it be step out or whatever. Again, tell us a little bit about that.
Okay, so for originally when we got to this project, when we started here back, was it 2021? It was a bit cut for the horse. It had actually already been drilled, that we knew there was high concentration helium, and it was a discovery made by another company who was actually looking for nickel. So the gas was a surprise to them. So we then, that was really the fulcrum for us to jump in and get this project because it just looked so compelling. But we didn't have the build-up data that you typically have. So what we have gathered to build up the subsurface three-dimensional model is airborne gravity. That's a fairly standard tool that we see in oil and gas as well. Conventional two-dimensional seismic, we have that. And then we also have ambient noise tomography, which is a slightly newer technique. And its nickname is passive seismic, and it works very well for us. So you leave a series of nodes, maybe a little bit larger than this coffee cup, out in the field. And what they do is they pick up, 24/7, every second of the day, they're picking up data from seismic velocity waves, which are naturally induced. However, where we are, they're actually not all of them naturally induced, because we're only about 15 miles away from North America's largest open cut iron ore mine. And with that, there's a lot of blasting. And that's really handy for us. So all those shock waves and the ambient noise tomography picks it up. And we leave them out there for about 3 weeks, and we get extremely high resolution data. And so for us, going back to that crystalline rock that we have, we're looking for fractures in the rock. And that technique works very well at mapping those out for us.
Right. Okay. And you've got these super high grades, which is very appealing. Talk to me about the kind of extraction process and then the storage process, and how do you get it to market? Let's take a few steps beyond. Let's assume we can find what we're looking for here. You're going to make a commercial economic decision, I guess, like oil and gas, relatively quickly compared to mining, say, which some people watching the show might be used to. But tell me about the extraction, storage, and route to market.
Okay. We have, it wasn't that long ago, a couple of months ago, we announced to the market that we have signed an agreement with a company called Chart Industries. So Chart Industries is a US company, multi-billion-dollar company, and what they specialize is in the design, the engineering, and then the fabrication and installation of large industrial gas facilities, amongst other things. So, I mean, things that we'd see would be like over at petrol stations. They provide a lot of the infrastructure for that. For large natural gas plants, they design and provide that for some of the major oil and gas companies. So these guys are the more or less the gold standard for this type of a plant. And the added bonuses is that one of their major fabrication centers is in Minnesota. It's just down the road. So we like the thought of Minnesota helium, Minnesota jobs, Minnesota equipment, and there's no compromise made because it is the best. So we've already started to feed them all the data that we've got, and they're putting that into their designs scenarios. And so what we would be looking at is any production scenario would be quite modest in its size compared certainly to a natural gas. And that's because its volumes are not being, hazardous material. But it would be there on site, right near the wellheads. The gas would go in, and the first thing that would happen is that the CO2 would be separated out, and we would look into making that into a liquid CO2, which is a high value product. And that is something that we would then look to sell to the local market. The USA currently has a CO2 shortage that has been ongoing for a number of years, and there is plenty of domestic demand. So we have a high level of confidence that we could get value out of that. And so that's the bulk of the gas, the CO2, and then the helium and the rest then goes through a separate processing stream. And then ultimately, the helium is then put into a liquid form using cryogenic distillation, which is fancy words for making it really cold and increasing the pressure, and every other gas freezes apart from the helium. And then it would go out by a truck. So we're not talking about pipelines. We're not talking about any real consumables apart from electricity, and we're looking at having it right directly on site as well.
Okay, and let's remind people about sort of timelines here, because you've raised a little bit of money recently. Obviously, you're getting after this the second hole. When you kind of map out the next 24 months, what does it look like in terms of demonstrating the economics around this thing, the speed to market in terms of potential revenue, and obviously somewhere in there you're going to spend a bit of money on capex, unless your partner's picking up everything. But again, just a line of sight to what that looks like for the next 24 months.
Certainly. So look, our intention is in the next 24 months to get to a point where it's final investment decision for proceeding with production scenario. So that's what we're working hard on. So it would be, I guess in that period, we would be finishing this campaign that we're doing now with field activities. We would then be feeding that into an update for the resource calculation. We would then be working with Chart to then come out with an economic assessment and looking at different scenarios of what production would look like. Then most likely you'd be looking at some additional field activities, perhaps a little bit more drilling to increase the size of the resource. When I say a little bit more, considering the high concentration that we've had to date, if everything continues that way, we're not looking at many wells in order to get into that initial production. By that, I'm talking, less than what's on my right hand. So then potentially some three-dimensional seismic as well. That will give us better resolution, and something that we haven't seen other helium companies doing. So once again, this is coming from the oil and gas world to build up that very high level of resolution of the reservoir so that we have greater confidence in production targets. If that all goes well, reach FID, and then from FID going through to, I guess, first production, you're probably looking at a period of 18 months for that. And so that would be the design, fabrication, installation, permitting, and so on. 18 months seems reasonable.
Okay. And look, I think last summer everyone got super excited about helium. There are a few entrants into the marketplace, different parts of the world, obviously, and a lot of money kind of flows. And without necessarily understanding much about the space, much about the thematic, it just sounds quite exciting. I think the headline numbers and drivers for this sounded like, oh, that may work. And I think the strines come slightly off of it. People may have had, I don't know, different expectations around the time frame. So if you don't mind, I'm going to kind of stick with it a little bit with the kind of process of understanding the economics. So you described in that outline the next 18, 24 months there. But when it comes to those economic studies, you're going to fund some of that, or is that, I mean, how does that work, and what does that look like compared to the conventional, say, again, mining project for those perhaps who aren't investing in oil and gas or indeed helium extraction?
Yes, certainly. So in order to get to a point where we say we've got reserves, that's the big one, to say something that we'll put hand on heart and as a bankable resource. So the difference with mining would be that to get to that point, the level of confidence in the resource, and this is me who's got a mining background, I know it quite well, is that typically you'd be drilling hundreds, if not over 1,000 holes into the ground to delineate that resource to that level of confidence. It's not the case with helium, particularly when we've got high concentration helium. One of the benefits of having such high grade like we have here in Minnesota is that it's got favorable for when it goes into processing. You're processing less gas, and that is likely to have a positive knock-on to the operational costs of the plant. But it also means that the overall amount of gas that needs to be discovered to justify initial production is, say, less than if your gas concentration was 0.5% or 1%. So we have those benefits for us. We know that our gas naturally flows quite well. We have drilled deeper, and the expectation is that that is likely to have a positive knock-on effect for flow rates as well. So really, we're only talking about a small number of wells potentially to go into production. And then the actual design, these things are not bespoke so much. It's off-the-shelf material for a production facility, but it's more or less saying which components do we need in order to optimize what we have. So there's no outside-the-box design or thinking with this. And the state of Minnesota last year, they put in place some new legislation for helium production as well. So from that regulatory standpoint, we're in a good place. But going back to one of your points there about, okay, so perhaps the market's a little bit disillusioned with the helium industry. Quite frankly, I do get it as well. I think that there has been, sort of a case of timelines slipping and some indeed going to production and then not meeting their production expectations. So, for us, I've mentioned things like doing 3D seismic, which is a layer beyond perhaps what a lot of other companies do. It's to give that confidence that the resource can actually do what we expect it to be able to do. In terms of the production facility itself, Chart Industries, they're top of their game, so we're not going to go with a cheaper, quicker alternative. These things, in terms of the costing for it all, so we, yes, as you say, we've raised money. We're actually in the process of raising at the moment. We have a placement underway that is open to US investors. So we've got a very good backer here in the US. And the expectation is, and what we've told the market is that money that's coming in, plus what we already have, is going to be sufficient, we think, from our calculations, to get through to that point of FID, to be able to say, okay, we don't need to go back to the market again. And that when we reach FID, whatever the cost would be for a potential production facility, I don't know at this stage, but whatever it is, to go off and get a debt facility for that, because we'll have reserves. We'll then be able to go off to customers and say, okay, off takes, here we are, and there's no shortage of potential customers for helium and CO2. Get those in place, and then debt fund the plant.
Okay, well, look, why I'm sort of drilling down on this side of things, because it's about managing expectations, right? And again, people may be used to analyzing natural resource companies in different ways. Mm-hmm. When I look at what's happened in the last 4 or 5 years, it's been devastation for juniors, for sure, in terms of access to capital, the cost of that capital, and so forth. The companies that seem to be doing well at the moment are those that kind of move towards some either near-term revenue or are in revenue, producers and advanced developers, right? And that's great. So for here, I'm interested in your plan, because clearly you could drill the bitches out of this thing and say, oh, look how big it is, and look at all the potential under the ground. Or I think, as you're intimating here, is with very few holes, less than fingers on your hand, you could create a resource which is good enough to get started, given the margins involved with helium at the moment. And so can you just lay out the business plan and why maybe starting sooner and smaller is better than building this thing out, which is a model people might be used to.
Yeah, you could build Rome in one day. You could go for that, and make the monster behemoth helium plant. But one of the key things with helium in particular, and particularly with customers, is yes, they're desperate for more product, but the other thing is reliability. Like it has to be a reliable source. They're talking about long-term agreements, and you could just imagine like if they're making semiconductors, and they said, okay, we put all of our eggs into this one company's basket for helium supply, and all of a sudden they're letting us down. Can you imagine that? The knock-on effect to their business is horrific. So if we can demonstrate to the world that, okay, look, we've gone off, we started reliable production, quality equipment, a reservoir that we understand completely, there's no surprises with that instilling that confidence, and then we grow our customer base. So with helium, there is a small spot market out there, but it's mostly long-term offtake agreements. And so you're not going to go off immediately and get, 100% of your product all off-take agreements, because people have existing contracts as well. So you take that into account. And so the way that we see it is like, okay, let's go off. And who knows, like, maybe with 5 wells, maybe it could justify a huge plant. I don't know. We've got to do the work. But, we're going to have the second well finished, most likely by the end of this month. And so we'll have a pretty good idea, almost halfway there to that number. We then look at the economics of it and say, okay, well, look, here's what we know about the market, of which we know very well. Myself and some of my colleagues have been in this industry now for a decade. So we know the fundamentals and go, okay, look, here's some customers that are willing to, take us on. This size plant would satisfy them. And then in order to grow it, to have greater output, obviously if the resource, if the resource and reserves justify it, then to increase output. We're not looking at installing something else and doubling our capex. We're looking at then, modular attachments to it to increase the outputs. So I find it very appealing for multiple reasons. One, we're not going to start producing so much that we don't have enough customers for it. And the other one is to be able to tell our shareholder base, of which I am, one of the major shareholders. I think I'm number 3 at the moment, the third largest shareholder in the company. I don't want to be diluted down to nothing, that's for sure. So it's a case of, right, let's get into initial production, let's start getting money. And if we do need to do more work to go and increase the reserve base a bit more, sure, let's use that revenue to go and do that. But no, otherwise, yeah, probably the biggest one against doing further dilutive capital would be me.
Right. Okay. Because obviously, if you look at the supply and demand drivers here, would be really, really good to try and understand a little bit more of current producers producing less, depleted reserves, etc. There's no sort of, not a lot of kind of pure play players out there as well. So my expectation is that we're going to possibly have some issues coming down the supply side. I mean, how do you read that in terms of competition? Are you going to be one of many? Or is there some upside through scarcity?
Look, I think competition is healthy, and I think that the current market out there in terms of supply could definitely do with multiple players. I think one of the bigger issues is that it's too centralized at the moment. You've only really got a couple of helium production facilities out there, and if one of them goes down, then the whole market suffers because the distributors buy their product from these different sources. One goes down, they all are affected by it. So there's a lack of diversity at the moment in terms of supply. The other thing is that still more than 95% of the world's helium production is as a byproduct of natural gas. So there's no flexibility whatsoever. So you can't start increasing more, or even if, say, a customer doesn't need product for whatever reason for a particular month, they're still being forced fed it, and then it's just wasted and it will vent off to the atmosphere. So there's no flexibility in it. So for pure play helium occurrences akin to what we have here, it's very strategic almost, because it allows that flywheel in the system. It allows that flexibility that currently the market doesn't have. In terms of the demand for it, the demand's healthy. It's only increasing. We're seeing now that semiconductors is close, or if not has already, overtaken MRI as the number 1 consumer of helium. And we're seeing numerous new applications. Quite an interesting one is global energy demand, and it's forecast that, what is it, a third of our power is going to be going off to data centers because there's such huge consumers of energy. So now, helium being used to cool those down. We're seeing lots of quite, enterprising uses of it. So we don't see it as we become more tech, sort of oriented. The use for helium increases. But there has been talk. It was mid to late last year about the helium price dropping, and it's worth probably addressing that. And that was on the back of Russian helium production had started up again, and that was going into Asia. And yeah, look, yeah, definitely there was some price decrease there, but really it was a case of, I don't think we're in the USA and our market is the USA. It appears very unlikely that Russian helium is going to be coming into the USA. And even if relations were all fantastic, getting that Russian helium across to the USA, it's a commodity that doesn't like to travel long distances. You start to lose it. It's just like the balloon. After a couple of days, it's shriveled up on the floor. It's the same on a macro picture as well, with large transportation distances. So for us, our storage is the reservoir itself. You take it out as and when required. We don't put it into tanks or anything like that. It's the reservoir. And then to be able to give it to the US market as and when they require. What in the meantime, USA production is continually to drop on a year-by-year basis. So, in the next couple of years, in order to satisfy the USA's demand, they're going to have a percentage of helium probably coming in from abroad, and that'd be the Middle East or wherever it may be. So demand for our product, for a secure, safe supply of US helium, appears well and truly to be there.
Okay, so given those sort of I guess probably geopolitical is probably not a bad word to use there. Russian production is going to go east, but then if it goes east, then I guess what was produced in the west won't be going east because maybe their demand is sated. I'm not quite sure, how it kind of flows, but they're in the base of the next question, which is around how does one go about doing deals with a, say, Gantt Industries or off-taker or long-term contracting in terms of pricing this, because at moments last year the margins were vast, and yesterday at the end of the year it kind of dropped off a bit. So how do you go about putting those numbers together, and certainly to feed your kind of economic studies?
It comes down to individuals, negotiations. So we would be looking at going directly to the major end users would be our starting point. So that would be going off to bulk users of helium, for which we are familiar with. And so these are space launch industry, semiconductor, MRI, these types of businesses, and they are certainly aware that we already exist, and we've already said hello. So then it would be a case of saying, okay, this is what we have the ability to be able to produce and provide. And then really it comes down to sitting down at the board table and negotiating at a price. And factors that would go into it, would be, okay, when's their availability to start taking product, et cetera, how much do they need, how regular, proximity to us, and yeah, it's it. But the price suppression from last year, I mean, that was people that were coming out of contract that were displaced from helium production itself. And so, there was, I guess for them, they're in a real tough place. And it was, yeah, whereas in the USA, I think that my gut tells me that to have a local, reliable source, that would be something deemed to be very favorable. And we may see perhaps that reflected in the price.
So certainty is more important than price.
I would say so, because overall price is such a small component of their overall business.
Right. Okay. Interesting times. Well, I guess 2025. Well, you should have a lot of news out in the next couple of months, by the sounds of it. So, can you just again highlight? You said it in the interview, but can you just remind us, just in bullet form, what are the meaningful moments where there might be sort of step change in terms of valuation for the company in 2025?
The completion of our second well, Jetstream number 2. So that is that drilling. That one's going to start this week. Then after completion of that, we'll then be getting the downhole testing results for the 2 wells. So these will be the key one coming out will be the pressure and flow tests, as well as the laboratory results for the gases. So yeah, exactly what is in the gas and the percentages of. That data will then be given to our independent resource estimator. They will then do an update to our resource. Then we will be at the same time speaking to Chart Industries, who will then be putting in their model, all the data that we have, and then looking at different scenarios for production. And then economic assessment will be coming out soon thereafter. And then in the meantime, there'll be ongoing field activities. So there'll be additional seismic work and so on, stepping out from where we are now and broadening our resource area. Then culminating in a bit more drilling, and then yeah, as soon as the resource matches what the economic assessment says that we need to have, then with any luck we can then start pivoting towards production, offtake, permitting, and yeah, debt financing the plant. So it's last year we drilled a well, and it was all successful, and it was a lot of learning and de-risking in particular. The de-risking has now been done, so it's now right, let's crack on. So I really think that this year is going to be pretty thick and fast.
Okay. Well, we look forward to seeing a little bit about that. In fact, just before we go, you're on three different exchanges. Obviously, AIM, TSXV, and the OTCQB. Where are you kind of seeing the liquidity at the moment?
Recently, it's been the UK has picked up. In Canada, it's definitely picked up too. So, but I'd say that from what I've seen is that most liquidity has been in the UK recently. But that's we only listed a couple of months ago in the UK. But yeah, in both well, actually all exchanges, we're seeing an uptick since we've announced that we're back in the field. Yeah, we're getting quite considering the US from the OTC, we're actually seeing quite nice volumes there as well.
Okay. Tom, good man. Thanks very much for picking up the phone today. Stay in touch. We'll see how you get on. Okay.
Nice to see you, Matthew. Thank you.